Block, previously known as Square, reported their latest quarterly figures Thursday after the market closes. EPS came in line, revenue was a bit weak, and Q4 guidance was also weak-ish. And so the stock initially was down 12%, but at the time of making this video, just before the market opens, the stock is down now 2.15%. So maybe by the time I'm done with the video, I'll update you on the real price. But yeah, Block has basically done very, very poorly in the last 5 years. If you look at their performance as a publicly traded company in the last 5 years, it has been quite poor, right? It's only up 22% in the last 5 years when the overall market is up more than that. I mean, this year, the market is up over 20%. Year to date, the stock is down. Actually, it's really bad performance by Square. Year over year, we've seen a solid rebound, but that's because, well, the stock has been hit quite hard before. So yeah, I mean, this is a good company with bad leadership, in my opinion. I've said that in the past as well. Right now, they have a market cap of $46.4 billion, a forward P of 18.2 times, which is definitely not expensive at all. Maybe it might not be growing as fast as before, but from a bottom line perspective, this company is becoming more and more profitable, is expected to become way more profitable in the future as well. If you look at EPS growth year over year for fiscal 2024, up 95.2% year over year, then it's expected to grow 27.27% in fiscal 25 and 23.3% in fiscal 2026. So definitely the growth will come from the bottom line. Currently, the average analyst price target sits at $86, representing 15% upside from the price we're at today. It would not surprise me if analysts update their price target and it comes down a little bit lower. If we look at some pricing metrics, I mean, based on the 5-year mean, you can definitely say that this stock is extremely cheap, right? 18.2 times forward PE, EV to EBITDA 13.1 times, price to sales 1.7 times, price to free cash flow 64.7 times, and then now price earnings to growth 0.47. I mean, yeah, maybe the market just does not trust leadership in this company. And that's one of the main reasons why I completely sold out of Block. Well, when I bought it, it was Square, because, well, while the business could be doing much better, and finally, the last couple of quarters, they put a lot of, well, emphasis on the fact that, oh, we are going to return value to shareholders. I mean, they should have done much more. Now, yes, it's growing faster than PayPal, for example. But if you look at a company like Toast, which I've covered before, and I said, why buy Toast if you can buy Square? Because, well, Block offers Square, Cash App, and all the rest. You can see the difference in the growth rates between Toast and Square's business. So Toast is growing faster than Square's business. But okay, when buying Block, I still remain with the same point I made before. When you buy Block, you buy more than just Toast or, well, the equivalent of it. You get a bit more. The problem is still leadership. Now, I replaced Block with PayPal because, well, there the opposite happened. Leadership was bad, and suddenly we got new leadership, and I believe the company becomes better and better. We might not see the same growth rates, far from it. I think Block is growing much, much quicker than PayPal, but I trust PayPal's management today more than the one with Block. And this has nothing to do with the stock's performance since I don't own it anymore. But as investors, you invest in a company and you hope that leadership does not lie to you or performs as well as they should. Plus, you also have the board of directors, which their job was to basically maybe pressure Jack to step down, especially after the whole Twitter saga. But okay, it did not happen. Overall, the numbers, they don't look bad at all. I'll show you in just a second. So maybe the market is just waiting for a leadership change. That's just my opinion. Of course, do share yours down in the comment section below. Like, subscribe to all of that. Would really appreciate it. And if you want to support me even further, do check out the link down in the description and in the pinned comment with the top 10 best stocks to buy now, or go to fool.com/couchinvestor. Thank you very much. So let me zoom out a little bit just to show you how fast this company has grown, right? Revenue is up 3,465% in the last 10 years or so. Of course, we've seen a huge jump here, right? 2020, 2021, 2022 was basically flat. And then another reacceleration as the economy was reopening. And now, yeah, the growth rates for sales we've seen before, but the profitability profile of the company is where the focus is at right now. Free cash flow is basically expected to explode for fiscal 2024, then go from $2.59 billion to $3.23 billion for fiscal 2025, and then in fiscal 2026 to reach $3.47 billion in free cash flow. That's quite a big difference from the now just $542 million. That's why I say, if you buy this, the focus is on the profitability. Now, during the call and the report, they said the following thing. So Block is transforming 24 million Cash App cards into a better alternative to credit cards by launching Afterpay on the Cash App card. That's going to be quite interesting if they can undercut Visa and MasterCard. They delivered year-over-year improvements across all profitability measures in Q3 2024. Cash App card actives grew 11% year-over-year to 24 million actives. Cash App gross profit per monthly transacting active was $75, up 16% year-over-year. Free overdraft coverage has saved customers up to an estimate of $380 million in traditional overdraft fees. They launched an orders platform and consolidated back-office apps into one dashboard app, and they signed groundbreaking partnerships across various markets. Moving on to the main highlights. So gross profit came in at $2.25 billion, up 19% year-over-year, barely up quarter-over-quarter. Cash App gross profit increased 21% year-over-year to $1.31 billion, and Square gross profit is up 16% year-over-year to $932 million. As for operating income, of course, as you can see in the last couple of quarters, operating income continues to increase. We're now at $323 million with a 14% margin. As for adjusted operating income, 20% margin there, now reaching $444 million. Net income, a 13% margin, now at $284 million, and adjusted EBITDA margin of 36%, adjusted EBITDA of $807 million. And that's a solid improvement here year-over-year. With regards to Cash App Card, so they say they have here 24 million Cash App Card monthly actives that increased 11% year-over-year. Their Cash App Card actives transacted 6 times a week on average, and they saw spend per active increase on a year-over-year basis. They have been able to increase engagement and monetization. In the third quarter, Cash App's gross profit per monthly transacting active was $75 compared to $65 in the prior year, for a growth of 16% year-over-year. So you've got here Cash App inflows framework. You've got 57 million actives times 1,233 inflows per active, and so the monetization rate for this quarter, 1.52%. Yes, Cash App inflows did drop from Q1 and Q2 and only grew 13% year-over-year to now $70 billion. As for Square, so growth in Square gross profit was primarily driven by banking products and software and integrated payments, which grew 22 and 14% respectively year-over-year. International gross profit was $129 million, up 30% year-over-year in the third quarter, as they observed continued improvement in product attach rates, most notably banking. Square GPV was $59.9 billion, up 7.5% and 7.6% year-over-year on a reported and constant currency basis, respectively, and Square GPV in the US market grew 4.9% year-over-year, and Square GPV in the international market grew 20% year-over-year. You can of course see the Square GPV mix by seller size right here. It's always nice to see that the big segment grows faster than the rest. Now, touching back on my point of, well, this is becoming a more profitable company, and finally you can see this basically with total operating expenses, right? Year-over-year quarter comparison, okay, it's up a little bit, but if you look at the 9 months ending, it's barely up, right? Barely any movements there. So that's great. And so you can see the huge increase in net income this quarter compared to the same quarter last year, and then 9 months ending compared to the same, but a year prior. I mean, this is night and day. As for guidance for Q4, they expect gross profit to be up 14% year-over-year to $2.31 billion, adjusted EBITDA margin of 31%, and adjusted operating income of 15%. With regards to the full year outlook, we did get some upside and update on that. So what is up is basically adjusted EBITDA, margin of now 34% instead of 33%, and adjusted operating income, a margin there of 18% instead of 16%, and a rule of 40 sitting at 36% instead of 35%. They expect to reach the rule of 40 in 2026. They also expect strong gross profit growth in 2025 of at least 15%, consistent with that target driven by broad momentum across Block. We have a number of initiatives recently launched or launching soon, and we expect them to compound through the year, driving stronger growth in the second half of the year compared to the first half. On profitability, we are committed to expanding margins on an adjusted operating income basis next year, although we expect the pace of expansion to be less than this year as we invest in growth opportunity with attractive returns, particularly around go-to-market. Assuming the macro environment remains stable, we expect Square US and global GPV year-over-year growth to accelerate in 2025 compared to 2024. And so right now, if we look at the stock, yes, the market is finally open. The stock is actually now down over 4%. So on the day, you'll have that gap, but you can clearly see right now, I put it on the daily and not the weekly, so you can clearly see where we're at. We are sitting under the 20-day moving average, still above the 50 and the 200-day one, which sits at $69, $70 or so, the 50-day one, and the 200-day one closer to $68. On the weekly, if we zoom out, you can see that, well, since October 2023, the company has made higher lows with quite big jumps right here. The big resistance will probably be when you reach closer to $90 or so. But right now, it does seem like we have a nasty red candle right here. Let's try and maybe finish the week above the 20-day moving average. I don't know if that will happen. So the 50-day one here at $70 is quite crucial. So overall, good quarter by the company. Okay, guidance was a bit weak, but I think from a profitability standpoint, investors are getting what they should have expected, right? So overall, is this a buy the dip opportunity? I think so. If you're long this company and you believe in what they do, then I think, yeah, you could have some opportunities in the coming days. So overall, that's about it for me in this video. If you enjoyed this type of videos, leave it a thumbs up, subscribe if you have not, and I'll see you all in the next one. Bye-bye.